Missing a credit card or loan payment with Bread Financial triggers a sequence of automated account actions that scale in severity depending on how long the balance remains unpaid. Understanding these distinct phases helps borrowers manage potential financial fallout and minimize damage to their personal credit standing. The immediate consequence of missing the official payment due date is a late fee. Bread Financial card agreements typically structure late fees based on prior payment history. If an account has maintained a clean record without any late penalties during the preceding 6 billing periods, the initial fee is usually lower, often around $30. However, if a late fee was assessed within that 6-month window, the penalty increases, reaching up to $41. In addition to the flat fee, missing the minimum payment by the due date causes the grace period on purchases to vanish. Without an active grace period, interest begins to accrue immediately on new transactions, making overall debt accumulation significantly more expensive. If the account slips further past the due date without correction, additional financial penalties activate. Should the delinquency reach or exceed 30 consecutive days past due, Bread Financial is legally permitted to report the negative status to the major credit bureaus. A late payment notation of 30 days or more can severely damage a credit score, remaining on a credit report for up to 7 years. Furthermore, prolonged delinquency or repeated defaults can trigger a penalty APR. This drastically elevated interest rate applies to the existing balance and future purchases, compounding the difficulty of paying down the principal debt. Persistent non-payment moving past 60 and 90 days escalates the situation into severe delinquency or default. At this stage, Bread Financial may revoke account privileges entirely, block future transactions, and close the credit line. Outstanding balances can be transferred to internal collections departments or sold off to third-party debt collection agencies. Once an account reaches a charge-off status, typically around 180 days of non-payment, the creditor writes off the debt as a total loss. Even after a charge-off, the legal obligation to pay the full amount remains intact, and collection agencies may pursue legal avenues or wage garnishments depending on regional regulations. Mitigating these severe consequences requires proactive communication. Borrowers facing short-term financial hardship should contact Bread Financial customer service before the payment due date passes. Financial institutions sometimes offer courtesy waivers for first-time late penalties or enroll customers in structured hardship programs designed to temporarily lower payments or adjust interest rates. Addressing the oversight swiftly by paying the past due minimum prevents long-term credit bureau reporting and stops compounding penalty fees from spiraling out of control.